Okay, let's start with a big question. What if a multi-billion dollar shift in a major digital asset, what if that signals not some desperate exodus, but actually a really shrewd, calculated strategic move? Are we looking at a market on the verge of panic? Or is something maybe far more nuanced playing out behind the scenes? Something that, well, could even be a bullish signal long term. Welcome, everyone, to the Deep Dive. This is the show where we try to cut through all that noise, all the information overload, and really get straight to the core of what actually matters. Our mission, basically, is to sift through the articles, the data, the expert takes, all the jargon, and just unearth those crucial bits of knowledge. We want to give you, our listener, a genuine shortcut to being not just informed, but really well informed, armed with maybe some surprising facts, some insights that might challenge what you thought you knew. And today, we are plunging headfirst into what could be a truly pivotal moment for the whole Ethereum ecosystem, and yeah, by extension, the broader crypto market too, our focus. It's this record-breaking surge in ETH that's currently queued up for unstaking from the network's proof-of-stake system. So your mission for this deep dive, if you choose to accept it, is to come away with a really solid grasp of the different forces at play here. And they often seem conflicting in the Ether market right now. We're going to help you try and decipher whether this massive unstaking queue, is it really a sign of impending selling pressure or market downturn? Or is it actually something else? Maybe a sophisticated strategic maneuver by some really big players. Or, maybe a bit of both. We'll explore multiple angles, connect the dots that might not seem connected at first, and hopefully, through our chat, give you those genuine aha moments, the ones that come from really understanding something complex. So, yeah, let's unpack this. It's fascinating stuff.
It definitely is. And it's a situation that, just looking at the headlines, it might trigger some concern. I can see why. But as we always say here on the deep dive, getting the full context is just, well, it's everything, isn't it? Without it, you're really missing half the story, and arguably the most important half.
That's exactly right. Context is king. And when we talk about what might cause that initial alarm, we have to start with the headline event itself. It's a truly staggering figure. We're looking at nearly, $3.8 billion worth of Ether currently queued up for withdrawal from staking. Just to try and put that into some kind of perspective, that's more than the entire annual GDP of some small countries, or I don't know, enough capital to build maybe 5 of the world's biggest mega yachts. It's just an enormous sum of digital capital kind of poised for movement.
It truly is immense, and the immediate sort of operational context for that kind of movement is really important to grasp too. As of the end of last week, Friday specifically, there was a pretty substantial 15-day wait time for these withdrawals to actually get processed. The exact figure we're seeing queued is 877,106 Ether, which, yeah, at current market prices, that's valued at $3.88 billion. And this 15-day delay, it's not just some technical detail. It tells us something really profound about the sheer volume, maybe the coordinated nature of the ETH waiting to leave the staking pool. It's a bottleneck, sure, but it's also a signal of just how much interest there is in freeing up this capital right now. The Ethereum network, it's designed with these queues, right, to ensure stability, prevent sudden shocks. So when you see a long queue like this, it immediately tells you there's significant activity underway.
Okay, so it's not just the huge amount, but also this queue, this bottleneck, that really underscores the scale of what's happening. Now, that $3.88 billion figure, it certainly sounds massive on its own, but how does it stack up within the whole Ethereum staking ecosystem? Can you help us put it into perspective? What's its relative significance?
Yeah, good question. And to put that $3.88 billion in perspective, what's actually fascinating here, really fascinating, is that despite this record-breaking queue for unstaking, the overall health, the commitment to Ethereum's staking ecosystem, it's actually at record highs. If you look at the data, say from Validator Q, it shows we now have over 1.08 million active validators securing the network. That's not just a strong number, it's a base that's continuously growing. And that speaks volumes, really, about the long-term commitment and confidence in the network's security, its decentralization, its future.
Wow, over 1 million validators. That's an incredible figure. So even while this particular huge chunk of Ether is waiting to move, the underlying system, the sort of backbone of Ethereum, it seems remarkably strong. It's even expanding. That feels counterintuitive, doesn't it? Compared to the alarm you might feel just hearing about the unstaking queue.
It does. And that's exactly where the nuance comes in, you see. To expand on that a bit, roughly 29.5%, nearly a third of the total ETH supply is currently staked. That translates to a massive 35.3 million ETH locked up, actively supporting the network's proof-of-stake mechanism. Now, this percentage, it's not just a statistic, it's a really crucial indicator. A higher amount of staked ETH, generally speaking, signifies a more secure, more resilient, probably more decentralized network. Think of it like this, conceptually. The more capital that's committed, locked up to secure the blockchain, the more expensive and difficult it becomes for anyone malicious to try and attack it or disrupt it. It's a really powerful economic security model. So for you, the listener, why does this matter? Well, a high percentage of staked ETH is widely seen as a very positive sign. It fundamentally shows deep confidence in the network's future. It boosts its security guarantees, makes it much more robust against attacks. Plus, it demonstrates a profound level of commitment from participants.
These people, these entities, they're choosing to lock up their assets, often for a long time, earning rewards while directly helping network stability. It's a fundamental health indicator, showing collective belief in its long-term value. And yeah, it provides a pretty stark contrast to the short-term picture of a large unstaking queue.
That's a really critical piece of context. So, okay, we've established there's a huge amount of ETH queued up to leave staking, but at the same time, the overall staking system is actually thriving, hitting record levels. Which brings us, naturally, to the next big question. Who? Who specifically is driving this big surge in unstaking? Is this just like a broad reaction from tons of individual investors all deciding to unstake at once? Or are there bigger, maybe more coordinated players involved here? Let's shift from just the what to the really important who behind these movements.
That's exactly the right question, and it's a critical distinction to make. According to insights from DeFi analyst Ignace Aria, its analysis is often quite insightful. We find the primary contributors, the main drivers of this massive unstaking queue, are squarely the top 3 liquid staking platforms. So this isn't just about a broad wave of individual or retail investors hitting the exits. This points much more towards coordinated large-scale movements, likely orchestrated by major entities in the DeFi space.
Ah, okay, so this is more about institutional moves, or at least large-scale aggregated movements, rather than some kind of decentralized panic from smaller holders. That really changes the potential meaning, doesn't it?
Precisely. Ignace specifically highlights Lido, which is the largest liquid staking solution. By quite a margin, they're leading the pack. They have an enormous 283,000 ETH queued for withdrawal. Then following Lido, you've got EthFi, another really prominent liquid staking platform. They're contributing about 134,000 ETH to the queue. And then there's Coinbase, a very well-known, influential centralized exchange. They're adding another 113,000 ETH. So these 3 platforms together, they represent a huge chunk, a very significant portion of the total unstaking volume we're seeing. Their actions matter so much because they essentially represent the aggregated decisions of thousands, maybe hundreds of thousands of their users.
Right. Before we dig into why they might be doing this, could you just quickly explain what liquid staking platforms are for anyone listening who might be newer to this part of crypto? Because obviously their actions have this huge market impact.
Absolutely. Yeah, it's a really important concept to get. So in traditional Ethereum staking, right, when you lock up your ETH, it becomes illiquid. You basically can't use it for anything else until you go through the unstaking process. Liquid staking platforms, they offer a pretty clever solution to this. They let users stake their actual Ether on the network, but in return, they give the user back a liquid token. Lido's Stake is probably the most famous example. This token, it represents their staked ETH plus any staking rewards they're earning. The key innovation, the crucial part, is that this liquid token, the Stake or similar, can then be traded freely, used as collateral in other DeFi apps, maybe even sold on exchanges. All while the original ETH is still locked up, staked, and earning those rewards. So it provides liquidity, flexibility to stakers who'd otherwise have their assets just frozen. Therefore, when these big platforms like Lido or EthFi queue up withdrawals, it's often because their huge user bases are collectively choosing to unstake the underlying ETH, perhaps exchanging those liquid tokens back.
Their actions have such a big market impact because they aggregate the staking activity of enormous numbers of users. They act as these massive intermediaries. So their decisions, which are ultimately driven by the combined choices of their users, can really move the needle in the broader market far more dramatically than, say, any single individual's actions could.
Okay, that makes perfect sense. Thanks. So looking at this initial picture, massive unstaking queue, mostly driven by these big liquid staking platforms. The first intuitive thought might just be, okay, simple. This is massive profit taking. But my gut feeling, and kind of the whole point of the deep dive, tells me it's rarely ever that simple, is it? Is that the full story here? Is it just profit taking?
You're absolutely right to question that first take. While, yes, a surge in unstaked ETH might intuitively suggest massive profit-taking is happening, and let's be clear, some individuals are undoubtedly taking profits. Realizing gains, Ignace immediately brings in this powerful counter-narrative, and this adds that crucial layer of nuance. It suggests that while, sure, the profit modal is probably there for some, the bigger picture suggests something much more strategic and potentially maybe even bullish is unfolding at the same time. What's really fascinating here is looking at how the market is actually absorbing this potential selling pressure.
Okay, so it's not just a one-way street of selling pressure hitting the market then. What is this counterbalancing force you mentioned? Are there significant buyers stepping in, people soaking up this potential sell-off and stopping a major price drop?
Yes, indeed there are. Ignis really emphasizes this point. Recent, very substantial accumulation and quite robust buying strength coming from Ether treasury companies and crucially from the newly launched spot ETH exchange-traded funds, the ETFs. These are actually absorbing a significant chunk of this potential selling pressure. And this isn't just theory. We have some pretty concrete, compelling data here. Data pulled together from strategistreserve.xyz. It highlights a truly remarkable surge. The collective holdings of these strategic reserves and the ETFs, they've jumped an incredible 140% in just over a month, basically since May 1st.
Wow, 140%. That's an astronomical increase in such a short time for any asset, really, let alone one worth billions.
Yeah.
Can you give us the specific number just to really grasp the scale of this buying?
Absolutely. Their combined holdings climbed from 4,140,953 ETH back on May 1st to a really impressive 10,008,263 ETH more recently. Now, this sharp, very rapid increase, it's not just random market noise. It underscores a swift, deliberate, and pretty significant consolidation of Ether supply into the hands of major institutional players, corporate players. For the market overall, this signifies a really powerful counterweight to any potential selling pressure that might come from that unstaking queue. It strongly suggests that while, yes, some ETH is being freed up from staking, there is a very substantial, very strategic appetite from large, well-funded entities to acquire it. And this kind of consistent institutional buying, it's often read as a pretty robust signal for the asset's long-term prospects and for market stability overall. It indicates, a maturing of the asset class, broader acceptance among traditional finance players. It's really a testament to growing conviction in Ethereum's value and its future.
Okay, so if I'm getting this right, these strategic reserves, these new ETFs, they're acting almost like a giant whale in the market, maybe even like a buyer of last resort, effectively just soaking up the supply as it becomes available from the unstakers. That completely flips the script from just being a straightforward, everyone's taking profits event. It really paints a picture of sophisticated capital moving around.
It absolutely does. And Ignis's analysis, it goes even deeper. He highlights another really compelling and frankly quite bullish narrative that's directly linked to the potential, well, now the very real possibility of ETH staking ETFs launching.
ETH staking ETFs, wow, okay, that really would be a game changer if that happens. What's the connection then between people expecting these new products and this huge unstaking queue we're seeing right now?
Well, the analyst, Ignis, proposes that a significant group of investors, maybe particularly the larger, more sophisticated ones, might be strategically freeing up their staked ETH now specifically so they can re-enter the market through these new ETH staking ETF products once they launch. So think of it less like an exit from ETH and more like a sophisticated reshuffling of how they hold their exposure. They're not necessarily selling out of the ETH market altogether. Instead, they're just optimizing the investment vehicle they use, maybe for various reasons. These new products, these ETFs, they could offer better regulatory clarity, perhaps simpler compliance for large funds, maybe greater accessibility for certain types of institutional investors, or just, easier integration into the traditional portfolio management systems that ETFs naturally fit into. This implies that a big chunk of this newly unstaked ETH might not actually hit the open market as direct immediate sell pressure. Instead, it could just flow right back into ETH, but through a new, regulated, more accessible investment wrapper. That's a very, very different dynamic than a typical sell-off.
That is fascinating. A really sophisticated play. It's almost like moving money from, one type of savings account to a different one at the same bank, rather than pulling all your cash out entirely. So given this idea of strategic repositioning, what's the latest thinking on the timeline for these ETH staking ETFs? Is this something way off in the future, or could it be closer than we think?
Well, officially, the SEC's final deadline for approval is formally set way out in April 2026. Which, in crypto time, feels like an eternity away. However, Bloomberg ETF analysts Eric Balchunas and James Seifert, who are, widely seen as pretty authoritative voices on ETFs, they've put out a much more optimistic prediction. An accelerated one, really. They're suggesting the green light for these products could actually come significantly sooner, potentially maybe as early as October 2025. And that accelerated timeline, that certainly adds a lot of weight to this idea that sophisticated investors are actively positioning themselves right now for that future reality. Markets, as we know, they don't just react to what's happening now, but what they expect to happen. And that October 2025 target seems to have become a pretty significant expectation.
October 2025.
Yeah, that's practically just around the corner in market terms, isn't it? So, okay, if these ETH staking ETFs did get approved sooner, maybe way sooner than that 2026 deadline, what would the potential market implications be? How could that really change the game for ETH investment and staking beyond just absorbing this current unstaked supply? This whole scenario really makes you wonder, right? Is this just a complex, sophisticated dance of capital by the big players rather than some kind of frantic flight from the asset?
Oh, if those ETFs got approved sooner, the implications would be genuinely profound, really far-reaching. It would almost certainly open the floodgates for a huge new wave of capital institutional money, traditional retail money, that, up until now, has largely been sitting on the sidelines waiting for these regulated, familiar investment vehicles to get exposure to ETH, and especially to ETH staking rewards. This would dramatically increase the overall demand for Ether, potentially creating significant upward price pressure as all that new money flows in. Beyond just price, it would further legitimize Ethereum as a major asset class within traditional finance. That could lead to even more widespread adoption, maybe integration into mainstream financial products, broader public acceptance. So yes, it absolutely looks like a sophisticated dance of capital, not a flight. It feels like a calculated strategic move by larger players to optimize their positions, get ready for a future where crypto assets, particularly ETH, aren't just these niche digital things, but are easily accessible and integrated through traditional channels. It's about strategic repositioning for future growth, definitely not divestment driven by fear. It's actually a strong signal of maturing markets, I'd argue.
Okay, so we've got these two incredibly powerful forces almost pushing against each other, it seems. On one side, this massive unstaking queue, suggesting potential supply hitting the market. On the other, really strong institutional buying and this palpable anticipation, this expectation of new ETF products signaling significant, maybe even surging demand. It sounds like a classic high-stakes supply versus demand battle, which of course brings us right to Ether's actual price. You referred to the high number of queued ETH earlier as a double-edged sword for the price. Can you break that down for us? Why is it such a tricky situation for the price action right now?
Exactly. Yeah, it's a critical point for understanding where Ether's price might go in the near term. And it really does embody that idea of a double-edged sword. We basically have two main scenarios that will likely determine how Ether's price behaves over the next, say, weeks and months. It really depends on which of these powerful forces, supply from unstaking or demand from institutions, and ETFs wins out.
All right, let's break them down then. What's the optimistic scenario? The one where this unstaking doesn't become a major drag on the price?
Okay, scenario one, the more optimistic one, happens if those strong institutional inflows we just talked about, the buying from strategic reserves, the anticipatory buying related to potential staking ETFs, if that continues at its current pretty robust rate. If that demand keeps pace with, or ideally even outpaces, the supply being freed up by the unstaking queue, then ETH could, well, not only hold its current price levels, but potentially be setting itself up for another significant move higher.
Yeah.
In that scenario, the market basically just absorbs all the newly available unstaked ETH without the price taking a major hit because there are these eager, well-funded buyers ready and waiting to snap it up. It would really be a testament to the market's underlying strength and the conviction of these large players.
Right, so we're kind of relying on those big players, those institutional whales, to keep buying aggressively. It really does sound like a delicate balance, doesn't it, where that strong demand has to consistently offset the potential influx of supply from unstaking, almost like a high wire act for the market.
Exactly. It is a balancing act. Now for the flip side, scenario two. This is where the sword's other edge, the sharper one, comes into play. This happens if those institutional inflows decelerate significantly, or, worst case, if they dry up entirely for some reason. Should that happen, then the sheer backlog of unstaked ETH, that $3.8 billion we keep mentioning, that could weigh very, very heavily on the market. Without enough buying pressure to absorb it, that freed up supply could translate directly, and probably quite rapidly, into concentrated selling pressure. And that could lead to a sharp, significant price correction downwards. We actually saw a little glimpse of the market sensitivity to broader economic news just recently, didn't we? Ether's price, along with a lot of other risk assets, it faced a sharp correction last Thursday and Friday. That followed a hot U.S. Producer Price Index print, the PPI number. That particular economic indicator, it came in higher than expected, which immediately sparked renewed worries about inflation in the wider economy.
And in a world where central banks might feel forced to keep interest rates higher for longer to fight that stubborn inflation, well, risk assets like cryptocurrencies often feel the pinch first. Investors tend to de-risk their portfolios, leading to sell-offs. So this external economic pressure, it could definitely make any internal supply imbalances from unstaking feel even worse.
That makes perfect sense. Yeah, crypto markets definitely don't exist in a vacuum. They're deeply tied into broader macro trends and just general investor feeling about risk.
Okay, so given this volatility and these two very different potential scenarios, what are the really critical price points we should be watching for ETH right now? Are there specific technical levels where things could get, well, really interesting, or maybe quite painful for traders and investors?
There are indeed, and these are levels that many analysts are watching very, very closely right now. For Ether, the immediate critical support level to keep an eye on is $4,200. This is a key psychological level, but also a technical one. It's historically been a strong battleground between buyers and sellers, and the immediate risk, if that level gets tested and actually breaks downwards, is pretty significant. There's over $1.2 billion in long positions, currently at very high risk of liquidation if the price hits $4,200.
Okay, $1.2 billion in longs at risk. Just quickly, for listeners who might not be deep in the trading jargon, what does that actually mean? Why is it so important? Good question. Yeah, it's a crucial concept, especially in leverage trading. So if someone takes a long position, they're essentially betting the price of the asset, ETH in this case, will go up. Many traders use leverage, which means they borrow funds to make their debt bigger, amplifying potential gains, but also amplifying potential losses. Now, liquidation happens when the price moves against their leverage bet, to the point where the money they put up as collateral isn't enough to cover the potential losses anymore. At that point, the exchange automatically, forcibly closes their position, sells their assets to stop further losses for the lender. So if ETH falls down to $4,200, over $1.2 billion worth of these leverage bets on the price going up could be automatically wiped out. And this creates a kind of snowball effect, right? As these positions are liquidated, the underlying ETH gets sold off, which adds even more downward pressure on the price, which in turn can trigger more liquidations below that level. It can become a self-feeding downward spiral.
Crypto intelligence platform Kiyotaka. They reported that earlier in the week, the big clusters of potential ETH liquidations were actually higher up, between $5,000 and $5,200. That indicated a lot of leverage betting on even higher prices back then. But just in the last day or two, the pressure has visibly shifted downwards. Now those big clusters higher up, they're mostly gone, either liquidated already or positions were moved. And the focus, the main risk area, is squarely on these longs concentrated down near $4,200. This shift really shows how dynamic market sentiment in these pressure points can be. It signals a rapid change in where the most vulnerable leverage positions are sitting.
Right, so $40,000 is the immediate critical line in the sand to watch. But if that level unfortunately doesn't hold, what's the next line of defense for Ether's price? Where do analysts look for the next key support zones that might actually stop the bleeding and absorb the selling pressure?
Okay, if Ether does unfortunately fail to hold that crucial $4,200 level, the next significant area of defense is generally considered to be in a range between $4,100 and $3,900. Now, this isn't just some arbitrary range picked out of thin air. It holds quite significant technical importance for analysts. This specific range lines up precisely with the 0.5 to 0.618 Fibonacci retracement range. And technical analysts often refer to that specific zone as the golden zone for retests during an uptrend.
The golden zone. Okay, that sounds promising, almost like a magical safety net. What exactly makes it so significant? And maybe just briefly, what is Fibonacci retracement for people who haven't come across that before?
Yeah, great question. Understanding Fibonacci is pretty key to a lot of technical analysis out there. So Fibonacci retracement levels are basically horizontal lines drawn on a price chart that indicate potential areas where support or resistance might occur. They're derived from the Fibonacci sequence, that mathematical series, where each number is the sum of the two before it, 0, 1, 1, 2, 3, 5, 8, and so on. These numbers generate specific ratios like 0.618, 0.5, 0.382, and traders use these ratios to try and identify likely turning points in the price. In an uptrend, after a big price move up, assets often pull back or retrace to one of these specific Fibonacci levels before, hopefully, continuing their upward move. The golden zone, that 0.5 to 0.618 level, is often considered golden because it represents kind of ideal area for an asset to pull back to after a strong move up. It suggests the dip might just be a healthy correction before the main uptrend resumes. So if the price actually manages to hold within this zone, it generally suggests the underlying bullish trend is still intact and the market's just kind of pausing, retesting strength before potentially moving higher again.
And what makes this $4,100 to $3,900 area even stronger, potentially, is that it also happens to overlap with the previous significant high level on the price chart. The principle there is that once a previous resistance level is broken decisively, the price moves above it.
that old resistance often flips and becomes strong support on the way back down. So the fact that we have multiple powerful technical indicators all converging in the same $4,100 to $3,900 area, both the Fibonacci golden zone and a previous important price level, that significantly adds to its potential strength as a really robust support zone. This means if Ether does dip down into this zone, it could very well find solid buying interest, potentially signaling a bottom to the correction and maybe the continuation of its longer-term upward trend.
Okay, that deep dive into the numbers, the charts, these critical technical levels, that definitely helps us understand the immediate landscape, the sort of battles being fought right now between buyers and sellers. But let's just zoom out for a second. What does all of this really intricate interplay of forces, the unstaking, the institutional buying, the ETF hype, the price levels, what does it all really mean for the bigger picture, for the crypto market overall, and maybe more importantly for you, our listener? Because it's become abundantly clear listening to this that the market isn't just a simple sell-off or a straightforward buy-up. It's a truly complex, multi-layered thing happening here.
Absolutely. Yeah, if we try to connect all these different threads back to that bigger picture, what we've really uncovered is a much more nuanced market story than maybe those initial alarming headlines suggested. That record Ether unstaking queue, while, yeah, it certainly indicates some profit-taking is happening from various people, it's being fundamentally and quite powerfully counterbalanced by very strong, consistent institutional buying. And that includes this highly strategic positioning by major players who are clearly anticipating and moving ahead of the potential launch of these ETH staking ETFs. This whole situation, I think, is a really clear, compelling example of capital flow dynamics that are becoming increasingly sophisticated, multifaceted. They seem driven more by long-term strategic goals now, rather than just short-term market sentiment or retail hype.
So why is understanding this complex picture, this nuance, why is that so vital for our listener? Whether they're a seasoned crypto investor, maybe just a curious learner trying to make sense of the headlines, or even just someone trying to stay well-informed about this space.
Well, for you, the investor listening, understanding these dynamics is absolutely crucial. It allows for much more informed, much more proactive decision-making. You can confidently look beyond those maybe sensational headlines screaming mass exodus or market crash imminent, and instead you'll see that, okay, a large unstaking queue isn't necessarily bearish on its own. Context, like we keep saying, is truly everything. Knowing about the powerful institutional buying, knowing about the compelling ETF narrative, it gives you a much clearer, much more balanced view of where the market might be heading and what the underlying risks really are. This knowledge empowers you, hopefully, to avoid just reacting emotionally based on incomplete or potentially misleading info. And for those of you listening who are maybe just curious learners, this deep dive illustrates beautifully, I think, how these sort of micro trends like individual unstaking choices or the aggregated moves of specific platforms like Lido, how they intertwine directly with much bigger global macro trends.
We're talking about things like the significant acceleration of institutional crypto adoption, the profound impact of global economic numbers like that US PPI print on risk assets everywhere, and major regulatory shifts like the eventual approval of new ETF products. This is that genuine aha moment, right? About the true interconnectedness of global financial markets, how seemingly separate events can and often do influence each other in really unexpected ways. It's a powerful lesson, I think, in advanced market dynamics and how the world of finance actually works under the hood. And fundamentally, for everyone listening, this deep dive hopefully encourages and helps cultivate critical thinking. Our goal isn't just to throw facts and figures at you, but to try and equip you with the mental tools to question assumptions, to look beyond the surface narrative. Not all cues in crypto, or any market really, automatically mean FUD, fear, uncertainty, and doubt. Sometimes, as we've seen pretty clearly today, they can represent incredibly sophisticated repositioning strategies by major capital players, aimed squarely at long-term gains and potentially shaping how the market itself evolves. It's really about cultivating that habit of looking beneath the surface, questioning the obvious answer, and seeking out that deeper, more complex story.
That really is the core of what we try to achieve with the deep dive, isn't it? Helping you consistently see beyond just the surface level, beyond the immediate headlines. And this deeper understanding naturally leads us to think about what this whole situation signals for the future. What does this increasing involvement of sophisticated institutional players and the potential for these new innovative investment vehicles like staking ETFs, what does it all suggest about the maturation of the crypto market itself? Is it growing up?
It points unequivocally towards a significant, ongoing, I'd say accelerating maturation of the crypto market. Yes, it's growing up. The increasing and increasingly sophisticated involvement of these institutional players, it means less purely speculative behavior driven only by retail mood swings and more strategic long-term capital allocation. decisions based on rigorous analysis, fundamentals, broader global trends. These entities, they operate with vastly different time horizons, different risk management, different regulatory constraints than many individual traders. And the arrival of new investment vehicles like staking ETFs that further cements this shift. It provides these regulated, familiar pathways for traditional finance to engage with crypto assets in ways that just weren't really possible before. So this is just a market that's evolving, becoming more robust, more interconnected with traditional finance, and maybe, just maybe, less prone to some of the extreme volatility that was purely driven by speculative retail flows in the past. It really underscores how vital it is to look at both sides of the market equation, supply and demand, especially in this unique, dynamic crypto landscape, where new tech like staking and new financial products are constantly changing the rules of the game and who's participating. This isn't just crypto getting bigger, it's crypto integrating itself more deeply into the global financial system.
It is truly fascinating to watch the space evolve so quickly. And that's exactly the kind of joy of discovery, that deep understanding that we aim to bring you with every deep dive we do. We sincerely hope this discussion has given you a powerful shortcut to being incredibly well-informed about what is a really significant, quite complex event unfolding in the crypto world right now.
And we genuinely hope it sparks even more curiosity in you too, encouraging you to keep exploring these kinds of topics.
Absolutely. So just to briefly recap the core insights from this deep dive, we've thoroughly dissected that record Ether unstaking queue representing nearly $3.8 billion in ETH waiting for withdrawal. We've explored the dual, sometimes counterintuitive reasons behind it. Yes, some profit-taking, but crucially, a significant amount of strategic repositioning by major players looking ahead to potential ETH staking ETFs. We also uncovered that powerful counterforce, massive institutional buying, which is absorbing a lot of that potential selling pressure. And finally, we highlighted those critical price levels to watch for Ether, particularly the immediate support down at $4,200, and that vital technical support zone, the golden zone, between $4,100 and $3,900.
So maybe here's a provocative thought to leave you with as you go about your day. Given this sophisticated multi-layered dance of capital that we've just uncovered, how might future cryptocurrency market movements become maybe less about individual sentiment and swings in mood, and more about intricate institutional strategy and the underlying evolution of the market's infrastructure itself? Maybe consider how this kind of in-depth analysis, looking at the layers beneath the headlines, how that can fundamentally change your perception of market news and what really drives asset prices in this maturing ecosystem.
That's a fantastic, really thought-provoking question to end on. And look, if you found this deep dive valuable, or if it sparked a new question for you, maybe a fresh perspective, or even just an aha moment, well, that's exactly why we create the deep dive. We genuinely encourage you to continue doing your own deep dives into topics that intrigue you. Embrace that immense value of just being informed and curious. And just a quick note, if you did find value in what we shared today, engaging with our content, by liking, commenting, subscribing, it really does help support us, helps boost our visibility, and it allows us to keep creating this kind of quality crypto content for you. We genuinely appreciate your support and your engagement. Until next time, keep digging, keep learning, and stay incredibly well informed.